What we're trying to do with LevelFields is allow people to see the entire stock market for the first time. You'll hear about companies in industries you didn't even know existed. And there's always some company doing well, even in a horrible economy, because when someone is suffering, some other company is winning from that suffering.
Welcome to Truly Passive Income. I'm Neil Henderson.
And I'm Clint Harris. And on today's episode, we're joined by Andrew Einhorn. He's the CEO and co-founder of LevelFields. It's a cutting-edge fintech platform leveraging AI to simplify investment research. With a background in epidemiology and data science, Andrew has built and sold multiple tech companies, worked with NASA, and advised hedge funds. Now he's on a mission to level the playing field for individual investors by using AI to spot game-changing market events. What a bio. Andrew, thank you for being here. We appreciate your time. How are you?
Oh, good. Thanks for having me. Appreciate it.
Appreciate it so much. So now, if you could just tell us everything I just read in English, I would, listen, you got a really diverse background. You've done a lot of different things. Obviously, you're on the cutting edge of technology. Tell us a little bit about yourself, about your background, and kind of how you ended up heading in the direction that LevelFields is headed.
Sure. Happy to. I guess the common thread across my career has always been data. So I like answering questions and sort of finding truth using data to do it. At first, it was public health, solving questions like how do people get contamination through the groundwater? How does mercury get into the tuna fish? Those were actual projects I worked on early in my career, and then went on to focus more on kind of the commercial side and government side thereafter as a consultant. I was working for the Defense Department for several years as a consultant, kind of ingrained. My job was to build a technology system that analyzed risks for DoD, and I just kind of fell in love with the process of building. I realized like you could do two things simultaneously. You could be moving data around automatically and solving problems, but then you could also be building solutions. And so once I realized, early in, I guess, the career that I was a builder, I knew I had to go into the entrepreneurial path. So started a data science company in 2009. And the idea was pretty simple. It was look at social media and news media and try to create a synthesis of what people thought. What were they saying publicly? What were the narratives that they believed in? What was being spread out there? And I wanted to quantify it. And it looked kind of like polling research at first, trying to look at Twitter and say, this is what people were thinking about this issue. 65% think this, 25% think that, and so forth. And then I got more sophisticated as we went along. And so built the company from literally a napkin sketch in a bar to selling it to a private equity firm 10 years later. But along the way, all my clients were publicly traded companies and large government organizations. And the bigger they were, the less knowledge kind of trickled up to the executives because, it was just so stovepiped. Information didn't flow freely. So they hired us to have a platform that would flag an event if something was significant. For example, one of our clients was a train logistics company, transporting goods across the United States. About 30, 40 times a year, the trains would derail. And it would often take 36 hours or more for the executives to find out because it would start kind of very small, local, rural town, local news story. Next day, get picked up by big news. And then eventually they would hear about it. So they hired us as a platform to sort of flag it the second that someone, posted a tweet that there was a train that parked in their swimming pool. And our system would be able to see that, grab it, flag it to them. And we had lots of different clients, different use cases. Some were accidents and accidental contaminations, and others were on the positive side, product launches and things of that nature. But they were all tracking events all the time. And so that's what the system was designed to do. But we were dealing with trying to help the communications officers really get a handle on what was going on, what was being said reputationally about the companies. And as we watched, an event would happen, the share price would move X percent. Another event would happen, the share price would move Y percent. So we started to see these patterns and over time realized they were pretty predictable. The trouble was there was no sort of central repository of information the way that there would be for the Weather Channel, right? If I wanted to know what the average temperature in Dallas is in December, There's a database for that. So I can pack my bags and I know what to pack. There's no database, or there wasn't a database for how does the market respond to events. So you get a CEO like Bezos that leaves Amazon. How bad is that going to be for the stock? No one knew. It's all very much a gut reaction that people would have. They go, I know it's bad, but I don't know how bad. Is it down 20% bad, down 30% bad, down 2%? So we wanted to create that data set. So that would make it easier for people to make decisions and say, you know what, I don't care. I can see from the data set, usually it goes down and then it comes back up in 3 months. Not going to bother changing my holdings. I'm not going to freak out. And then for others who want to make some money, knowing what normally happens to certain events that happen again and again allows you to make constant income, by trading those events. It could be as simple as adding more to your existing Amazon holdings when an event like that happens, and then selling it in 3 months when it returns to normal. Or it could be, buying that dip, coming into it for the first time. So the more we dug into that, sort of at the tail end of the last business, the more we saw, there's a big opportunity in financial services. We ended up selling that business. We started LevelFields AI because we needed the AI to be smarter than the previous business's technology, which was more like, current or legacy Google search, I guess, Boolean, right? So with the AI, you could take into account like context and meaning and probability and understand differences between like bluebird bio and a bluebird that flies in the sky. Right? You train AI to do that. So we set out to build an event-driven analysis system. And as we started it, COVID hit. And it was like, oh yeah, okay, mission is definitely right. Biggest event in 100 years comes in, changes everybody's investing process, changes the trajectory of like every company. And it just crystallized really in our head that we were on the right path, that events change everything. They impact companies, almost permanently when some of them happens. Look at what's going on with United Healthcare today. Stock's down like 60% in 2 days just on, a case opened by the Department of Justice, which is a scenario that we have on our application. So we wanted to make this really, really simple for people so they could come in, have kind of a sword of truth, and make decisions better.
Okay. Holy smokes. A lot to unpack there. I got to be honest, I'm really surprised to hear the direction that you're taking this in terms of looking at data. When I heard data, I think of, like, if you think of real estate data, you're like, okay, comparative market analysis, the bricks and sticks and what the neighbor sold theirs for next door and what's the price history and what's the mortgage rate and like what's the rental income. And you can kind of back yourself into evaluation using data from around that area. And I thought we were talking about like analog data points. But really what it sounds to me like you're using is it's basically a public sentiment meta-analysis. Is that fair to say?
That's very fair. Yeah. I mean, the stock market in general is definitely a sentiment analysis tool for what the market thinks the economy is going to do.
You're taking all these independent data points that are literally just consumer sentiment that's being put out into the ether, and you're gathering that, and then you're looking to see what the reaction is in the market. You're quantifying that, and you're using that to create a predictive analysis tool as to what's going to happen in the future with a similar event.
Correct. Yeah. We try not to call it predictive because, past performance is not necessarily predictive, but it usually is. And so, yeah, we want a data set so you can look and see, well, how do people normally react to something like this?
Is there a way to judge your accuracy with the program? Like with what you're expecting, like what's the standard deviation of kind of where something happens? Oh, we got a new pope, whatever, what's going to happen to white gowns in Italy? I don't know. I'm making something up, right? But like you're looking at some life event, a train derailment, a Department of Justice case that gets opened up. And you're quantifying to the best of your ability something that's changing. So by definition, I would think that usually using and leveraging AI, you're getting better all the time because over time it's becoming more and more accurate as more data is input into the system. What kind of accuracy are we talking about in terms of market fluctuations?
So we have the system broken out into about 26 types of events that occur again and again to corporations, to public companies. So it could be a CEO departure, a CEO hire, a Tesla product launch, An investigation opened by the government. These things happen again and again. Each scenario, which is what we call this grouping of events, has a correlation component right on the platform. So you can see like what is the win rate, is what we call it. And that is the percentage of the time it goes in the expected direction, up or down, right? Share price. So some of them are 90+%. Others require, if you filter it properly, like for example, if you have a CEO that departs, if they depart a company that is a poor performer, share price actually goes up. If the company is not a poor performer, if they're an outstanding performer, the share price goes down. And so when you apply that one filter on the company performance, you get upwards of 80% win rate. The deviation is really more about something else that was happening in the market that day. Like, Powell comes in and starts talking about hiking interest rates. It doesn't matter what happens with that one event because the macro event takes over. So if you were to control for those external events, the correlations would be more almost 100%. And that's what we look at on the back end before we put the event on the front end for users, is we make sure there's a high correlation. So you can eliminate a lot of the noise that happens in the news these days. A lot of opinion, a lot of what if, rumors, all that stuff that doesn't necessarily move the share price. We try to get rid of it. So you can just focus on the things that are going to make money.
Let me sort of talk through this. Just one, so I understand it. And I think probably any of our listeners are probably having the same confusion that I am. Share price is a lagging indicator of massive number of data points. And what you're trying to do is identify those data points that are going to create a share price based on sentiment. Now, what we're talking about is this tool is primarily used by day traders. Is that who would be the primary user of this data?
It's pretty broad. We have day traders, swing traders, option traders, and long-term investors. So it's really a research automation tool that also identifies trade ideas.
So if you're dollar cost averaging and you can predict, instead of just continuing to buy every month, and you may know on average there's going to be 2-3 dips through the year, you can kind of wait for an indicator that may be coming and try to buy the dip if you're long-term, versus obviously day traders are riding the market up and down and trying to make trades.
For sure. And some of the types of events that happen are they're transformative, right? So if you have a new product that's being launched and it's going to be a game changer for the company, that's a long-term investment, right? We have some scenarios that are like healthcare companies that get an FDA approval for a new medical device or drug that could change the next 10 years of their income. But if you get it early, you ride it for that, 10x return over those 10 years. And so that's what we try to take kind of the mystery out of the market. We've all been in that seat where you turn on CNBC and it's like they're talking about a stock that's up 1,000% this year. And you kind of wonder and like, well, that's great. Now, how come I didn't hear about it when it was up 100 or even 50? And so that's what we're trying to solve for. It's like, what were those early indicators of success? We saw it actually with GameStop as one of our case studies. So if you were to follow our scenario, we have an activist investor scenario. They come into a company looking to change things around. They came in about 8 months prior to GameStop being a household name. And it was up 300% before the short squeeze even started. So following that, you would have been up whatever it was, 21x, in a year. But it's just putting that as an example that there's always some kind of early indicator, some event that catalyzes the rest of it. And it's finding that and following it. It gives you the chance to do something more long-term.
Is there a pure play in looking at crypto because it's so sentiment-based? What's that application?
I mean, you could do something similar. If we looked at crypto a little bit, we found that largely it trades as a group. There's not a lot of distinction between them. So it wasn't worth putting on our platform. We do have a crypto scenario that looks at large companies that are now adopting or accepting cryptocurrency. So for example, if Visa allows you to buy things in Bitcoin, that would be on this scenario. It's more about looking at it from kind of a sector investment where the adoption is happening. And you can see some interesting things, healthcare companies they're trying to do like a micro strategy. They're just loading up with Bitcoin as a business model, others that are allowing you to buy cars with Bitcoin and things of that nature.
So in your past experience, especially working with government agencies and large companies, what were some of the most surprising events that had an outsized impact on stock prices that maybe people might not have expected?
On the public company side, there's a lot of government actions, even just the threat of like an antitrust lawsuit. And you see that kind of lingering against Google, you can really suppress the share price for a long period of time. And what's interesting too is when they emerge from that and eventually they get like $1 billion fine or something huge, the share price always goes up when they get the fine, which kind of is a head scratcher, right? You think like they just lost money. Why are people celebrating? But if you understand kind of like the market hates uncertainty. So it punishes uncertainty and it rewards certainty by being able to predict it. So, when they get that big $1 billion fine, the share price is going to go up because it's conclusion time. It's over.
Right. They know where they're finally going to land the plane on this issue that they've been fighting.
Right. The storm is through. Yeah, exactly.
I love that. So talk to me about LevelFields from the consumer standpoint. We got a bunch of people listening right now. I'm one of them. This is not a product that I've used before, and it's significantly different than what I thought it was. So tell me about what that product looks like for me, the consumer. What's my experience when I log on there, and kind of walk me through that process so people can anticipate what this looks like and what the implications are for their portfolio.
Sure. Happy to. So if you go onto LevelFields, the first thing you see is a homepage with about 25 different scenarios, different types of events. They are groupings of events. So that scenario could be, let's just say it's CEO departures. That might have 400 or 500 events over the last year, and it will show you the average price move for a day, 10 days, a month, 6 months, and so forth. And then it has a grouping of filters that you can manipulate and kind of do back tests with very quickly. So you could say, well, what if it's a large cap tech company? How does that work? What's the average price move? And so the idea is that each of these scenarios can be its own investment strategy because it's happening again and again. So if you have 300-400 events, those are 300-400 times a year you could make money. And it could be, a 3% move, or it could be a 30% move, depending upon, the company and the event. Some of the events are way bigger than that. We have one scenario where I would say once every couple of months, the event is about 100 to 600% share price growth. Those are, companies that are getting big contracts. And it's just stuff that gets buried in the news. And most of us can't track this because it's 6,000 companies, 24/7 tracking and then trying to sort through all the junky news. So that's the job of our AI, is really to just focus on the things we know is going to move the share price. And if you know it, you have a chance to make money off of it. You can develop your own strategies, or you can use the ones that are kind of out of the box.
Have you built a tool or put together a fund or AI or anything like that? Or has anyone that is choosing some of those top performing changes that are happening and then making trades accordingly? And like a blended, like let's say you've got a fund of 15, 20 of those decisions that you're tracking 300-400 events throughout the year or whatever, and you build a strategy around that invest. What does a blended return on something like that look like?
Yeah, it depends on, if your hold time depends. But let's say if you were a long hold time, we're working with a company and wealth management shop called Farther. And so there's a wealth manager there, Michael Flatley, who was using our data to run portfolios for his clients. And we've done some back testing over like 5 years, and it outperforms the S&P by somewhere between 2 to 7%, over the course of a year. So say S&P was 11, it would be 13 to 18. And when you look at different benchmarks, we have a small cap event type. It was outperforming by like 300% against the Russell 2000. those were more passive strategies. So you're sitting in those positions longer. We have an affiliate organization that we work with that's a fund, alternative investment fund. And that's been looking at some of these events coming through the system. And, they're up 13% year to date when the market had been down, they were up. And so the nice part about it on the strategy side is there's bullish ones and there's bearish ones. So you could be betting the market or betting the share prices down during periods where market sentiment is poor. And when market sentiment starts to pick up, like now, the bullish scenarios tend to do better. So it also gives you a chance to make money in all types of situations, which our users really like.
So you've built LevelFields around AI. How does it differ from the more traditional financial tools and stock screeners that people may be familiar with?
Well, if you run a stock screener, let's say you go to Yahoo Finance, you're going to be asked the usual questions or filters, market cap, earnings per share growth, PE ratio. And all that's good, but it doesn't give you any context of where that company is. And now that data could be anywhere between 3 and 11 months old, depending, because foreign companies don't have
lagging data.
Yeah, it's old data. So you might have a company that looks great, right? It's got a great dividend yield. It's 11% dividend yield. And you're like, wow, this is amazing. But the dividend yield is great because the company is down 30% over the last 3 months because the CEO was indicted for fraud or something. So we're trying to create that extra context that everybody still has to do, because when you start that stock screen, that's not your finish point. That's your beginning. You get a list, and then you have to vet every single company on that list one at a time to make sure there's not some pending litigation against them. There's not some Justice Department investigation. They haven't been called out by a short-selling hedge fund for fraud or market manipulation. So that's what our AI is looking at, the context, and then also pairing that to those traditional fundamental filters, which we also have on our platform. And collectively, what that does is allow anyone to come onto our system and set up their own financial AI agent. And you say, look, I'm looking for this type of company with this type of performance in this sector that's having this type of event within the last, X number of days. And I want to find that all the time. Anytime you find that company, you let me know. And then it will just send you an alert. So it's looking for those criteria. And really, it's sort of like if you could, take a Google News on steroids, pair it with a Yahoo Finance, and mix and match a ChatGPT over it. That's, in a nutshell, what LevelFields AI is.
Wow. It's funny. It used to be people would read the Business Journal or the Wall Street Journal or something like that, and to find something that would influence their decision to buy or sell a stock. And you're effectively looking at almost in real time by doing a meta-analysis of different social media posts. And you're getting so many more data points, so much more rapidly, and compiling that in a way that no human has ever been able to do before. Let me ask you this. In a world where there is so much noise, what are the challenges, right? Like I sometimes say that we're in a situation now, we're in a world where there is more distraction than there has ever been. There's also better ability for us to network and connect with people, just like we're doing here on this call. So there's benefits to it as well. I think one of the things that comes out of that is that I don't think human interaction has ever been more important than it is now, because it's at a low, especially since COVID. But there's so much data out there. There's so much noise with Twitter and anywhere else where you're gathering your data points. How do you handle that? Like you're just looking for massive waves among society of like a ripple that starts over here from an announcement from the DOJ, and you're just watching it ripple across the Twitter sphere or whatever. Like there's so much information out there. How do you process all of that?
So we're largely focused on news. And by news, I mean company news, directly from the companies themselves. We get probably 5% from news outlets. The rest of it is announcements coming from the companies. And the reason is it eliminates a lot of bias that you get from going through a third-party media outlet. And it's not just bias, like you would say political bias. Oh, they like Trump, hate Trump, whatever. I mean by bias, like just in the coverage, right? So you hear Tesla, 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 Tesla every day, every news outlet, because that's what drives clicks. People trade Tesla, clicks drive ad revenue. The outlets go where the ad revenue is. They don't go to the $3 billion industrial company that has a 200% revenue growth. They don't care. Nope. So you're never going to hear about that company from the news. So if you are dependent upon a news channel, feed, station, whatever, to cherry pick investments for you, you're going to fall prey to their own bias of trying to do clickbait. And they're always going to be covering the largest companies that everybody already knows about. Everybody knows about NVIDIA. Everybody knows about Google, but they're going to continue to keep, pumping content about those companies because the volume necessitates it for their ad revenue. That's a bias in that you don't hear about the small, amazing companies that are out there, or the mid-cap ones, or even some of the large cap ones. So what we're trying to do with LevelFields is really allow people to see across the entire stock market for the first time without looking through someone else's eyes, without looking through someone else's filter. And it's amazing what comes up, because you'll hear about companies in industries you didn't even know existed on a regular basis. And they're doing well. And there's always some company doing well, even in a horrible economy. Because when someone is suffering, some other company is winning from that suffering. And that could be, war, drawing defense contracts and so forth. So we are really focused on just what correlates to share price movement. And we don't track every event. We track 26 types because we're confident that those types matter. And then you could ignore the rest.
Wow. That's amazing. I didn't realize it was that following the actual information and data coming out from the companies and doing a meta-analysis on that. That's so much more relevant than just public sentiment. And I'm absolutely astounded to hear that you think there might be some bias in the media. That's shocking. So
Yeah, right.
That's something I'll just have to process after we're done with this episode.
Give them a moment.
Yeah, I'll settle. How does LevelFields capitalize? Is this a membership that I'm paying for? Where's the revenue coming from?
Yeah, it's membership based. So the starting point is $299 a year. And that's for our kind of level one, or kind of entry level. And we also have a premium version that's $167 a month. That gives you access to more data, unlimited alerts. And then we also have kind of like our editor's picks, where we send out one or two of what's coming through the platform that we think has the greatest chance of success. That's largely for people that just don't want to deal with the platform. They just want to kind of, just tell me what to buy and sell and give me the trade idea, and I'll decide if I want to enter it. That particular program is up 5,000% since we launched it in 2023.
Wow. What's your total number of unique users on the site per month?
Oh, I don't know. Daily active, we don't really measure that. I could say that the average user has 60 different alerts per month. So that's 60 kind of opportunities that they use. And then over the course of a year, we'll send, hundreds of thousands, about millions of different event alerts. So, you could drink from the fire hose if you want. There's 5,000 tradable events coming to the platform per year. Or you could set up something more reasonable, some of the scenarios that have just one or two per month.
So one of the amazing things and mystifying things about AI is that a lot of these large language models, huge data set analysis things, people don't, like, deep down, they don't know how they work, even the people who create them. So how are you guys managing the risk of hallucinations and things like that? How are you, I guess the question is, how are you fact checking?
So we're not generative AI, so there's no hallucinations, because we're looking at things that are there. So if you think of our AI, it's more like a speed reader that's reading 30,000 documents a minute. And it's trained to just flag certain phrases, words, events that are taking place. And it pulls it back. And, we have people on the back end that say yes or no for the events as they come to train it. So it's not manufacturing things on its own. It's just looking for something, like a scout. And it's not summarizing. It's just saying, look, there's an event. Here it is. It said DOJ investigation. Must be a DOJ investigation. So that part is relatively straightforward. And because we're not looking at sources that are biased or third party for the most part, it also gets rid of attempts to, create misinformation in the market to manipulate the market, which we see a lot of on forums like Reddit and X now, when they put out these fake stories just so they could trade a couple percentage points on, the fallout that day. We don't do that stuff. We get it straight from the company. Now, of course, you're going to find some bad actors. Like you found, a Chinese company that fakes their financials entirely, which happens. Yeah, like I remember like Luckin Coffee a few years back.
Oh, yeah. I do remember that.
Right? They faked all of their numbers. And I was an investor and I got screwed on it. And I remember saying to my wife, like, this is either the greatest execution team in the history of business or they're falsifying their numbers. And then a hedge fund set up a camera outside like a number of Luckin Coffee shops. And they counted the number of customers and they counted the number of cups of coffee. And then they extrapolated like how much revenue each one was doing times the number of shops. And, it was like 300 or 400% above what the actual shop was doing. So anyway, you do have those situations. There's not much you can do, unfortunately, because, if it's unaudited financials coming in from the company, until they're busted, they're busted. But for us, we deal in mostly whether the events are taking place.
Yeah, I can't believe they got caught from the outside looking in, like a trail camera busted them. That's funny to me. Yeah, right?
If anyone here is a fan of the show Billions at all, and I don't know if this is Hollywood or not, but I think there's an episode where they talk about a hedge fund basically monitoring satellite imagery of certain factories and looking to see like how many cars are parked in the factories to try and give them an idea of like how much output that factory is doing. And I don't know if that's real or not, or if that's
real.
The future.
Yeah, I know the company that does that. I could easily subscribe to that data feed if I wanted to. They count all kinds of stuff. They'll count like the amount of coal coming out of a mine in a pile. They'll count the number of Teslas in a parking lot to look at, production line or sales.
Proof is in the pudding, I guess.
Yep.
That's amazing. Yeah, we have access. This is exactly what I'm talking about. We have access to data unlike we've ever had before. And until recently, we haven't had the capacity or tool to analyze that data and bring it down to a meaningful data set that means something to the average person. I'm excited to get on LevelFields and check that out. I got a question for you. This is one question that we ask all of our guests. And you may not have a favorite, but in your world with what you do, which is very different from a lot of the real estate investors or general partners or operators that we interview. In your world, is there one book that you find yourself recommending to friends or colleagues more than any other?
Interesting. There's not necessarily one book. There's a set of books. They're like snippets from Harvard Business School. And there's a book on change management, that I typically recommend, but it's like 10 or 12 essays that were
imagine that multiple data points. Who would have thought?
Right. I don't have time to read just one book. I got to read 12.
That's right. Have somebody read it for you and have Gemini print out the notes, right?
Right.
Well, listen, Andrew Einhorn, this has been fantastic. We have not delved into this topic at all. So really appreciate your time. If anyone who wants to hear more about you as the CEO and co-founder of LevelFields or read more into LevelFields, find out about what you guys are up to or improvements that you're making, what would be the best way for them to do that?
You just go to levelfields.ai. You can sign up for a free newsletter. You could watch the videos we put out on this stuff on our YouTube channel, LevelFields AI.
Excellent. Well, thank you, Andrew. We really appreciate your time. Thanks for being here.
Yep, thanks.
Thanks for having me. Appreciate it. I had a good time.
Thank you so much for listening and watching the Truly Passive Income podcast. If you liked the show, if you think it would be useful for someone else, the greatest compliment that you could give us would be to share the episode, leave a comment down below, or leave us an honest review. If you have any questions, don't hesitate to let us know down below. And remember, with truly passive income comes freedom of time, place, and the freedom to pursue your higher purpose.